Well done, welcome. You're watching Closing Trades on ET now with me, Snehi Shah. With me is Harsh Saitan. Harsh, look at the recovery in the market that we've seen today. A sustained run for the second day in a row and multi-month high coming in for our Nifty, if I'm not wrong.
Well, yes, it's a very strong move today, and really essentially when you're looking at it versus the kind of move we saw yesterday, that's what really reinforces today's move. 0.9% higher when the Nifty is concerned, and even within the Nifty, now we've breached 25,500. We did speak about this level with Kunal last week. And he did mention that maybe it may take a week here or there, a few trading sessions, and that's exactly how it's played out. So 1% higher. We will give credit to Kunal where credit is due. But let's quickly look at the breadth as well. And on the Nifty, the breadth is extremely strong. 42 advances to just 8 declines. The top gainer of the day, Nestle, on the back of those numbers, 3.7% higher. Titan is the other one perked up in trade, 2.6%. But look at a move from Kotak Bank. 2.4%. That's a very strong move. Tata Consumer, Axis Bank not too far behind, 2% higher. And then there's M&M, which is also nearly 2% up. So that's the kind of back consumption and financials. That's what's leading the trend, at least at this hour. Let's look at the top loser on the other side. HDFC Life, SBI Life, both of those languishing at the bottom after HDFC Life's numbers. Soft set, failed to impress the street. Maybe some more to go is what the investor seems to be suggesting, or the street seems to be suggesting. Let's look at the Nifty Bank as well. And really the gains are led by the Nifty Bank today. 1% higher on the Nifty Bank. Nifty IT, no negatives there. And that could be a positive with regard to the Nifty IT. On an earnings heavy day, you're going to have Infi, you're going to have Wipro, you're going to have LTI Mindtree, if I'm not wrong. Eternal, of course.
In just a bit from now.
So you'll have all of those names, but within IT, those three, plus you'll have Eternal also come in and influence markets. The Nifty Private Bank, 1.25% higher. Nifty Realty up 1.7. Mind you, it was up 3% plus yesterday. So you've seen another very strong move on the Nifty Realty over the last couple of sessions. If I look at it across both sessions, it's a very strong move. And we'll talk about all of this and a bit more. The Nifty Auto, we've ignored that completely, 1.3% higher on the Nifty Auto Index as well. So those are some of the big movers. Let's look at the broader markets as well. The Nifty Mid Cap, Small Cap. Well, not as much enthusiasm on that side of the market. And that's largely because it's some of the heavier, larger private sector banks which are influencing the market. Some of the heavier Nifty Auto names like M&M, which are influencing the market rather than some of the smaller ones. And therefore, you're seeing that divergence in terms of performance between the Nifty Mid Cap as well as the Nifty Small Cap versus the Nifty Large Cap. So that divergence is clearly visible. Let's talk about the advanced decline and assess the breadth once before we go ahead. Well, Reliance Industries is perked up 1% as well. So you've got some of the heavyweights really also pulling their weight behind the index. The advanced decline, if we can quickly pull that one up and we'll get a better sense of the breadth on the market. There you go, coming up right on your screen. So the breadth, obviously positive, but okay, it's not actually. It's negative, the breadth. Of course, we'll wait and watch as to how that plays out as the day goes by. Kunal Bothra, what are you seeing?
I think it's no complaints market. You're headed above the 25,500 mark. Bank Nifty is perched at almost new highs or closer to lifetime high levels. Strong recovery across various sectors, FMCG, realty, so on and so forth. I think it's a no complaints market as such, looking at the way the markets have gone through a decent recovery. I think what we should now be looking out for is this momentum to sustain for the indices. That I believe is the bigger positive which one should be eyeing. My sense is that after this kind of a strong up move over the last couple of days, you might say, in a sense, a bit of a pause, which may come by over the next couple of days, at least in terms of the index. But that pause should also be taken as a breakout, further breakout move for the index moving up higher. What we've also seen is that the move in the last 1 week or 10-15 days odd, I think has been more calibrated, and at every move up higher, we've increased the supports for the index. So we're discussing at 25,000 as a support. Now we should be looking at 25,000 to 5,300 as a strong support. So the fact that the index keeps on moving up higher in a step manner, I would probably expect that the trend will continue to move up higher on the upside. and 26,000 is now the next target for the index within near term.
Okay, so that's your Nifty target. Kunal, what about Nifty Bank? A 600-point uptick is something that we're seeing on Nifty Bank. You know, PSU banks in the first half of the trading session were deep under pressure, but that recovery we've seen overall also got that index once again into the green. Private PSU, what's your outlook when it comes to the overall banking space?
So see, those intraday tussle will keep on happening.
Yeah.
That someday PSU banks will outperform, the other days private sector banks will outperform. But then you have to look at this in a span of, say, a week or a fortnight or maybe a month. And I think when you look at this, it's been more systematic move within the banking names. It was initially the PSU banking stocks which moved up higher, and then the private sector banking stocks got its mojo back. You saw the likes of Axis and Kotak Bank to a larger extent leading the charge. And now you're seeing ICICI Bank and HDFC Bank seeing a follow-through up move. Even the mid-cap end of the private sector banking names, Federal Bank, the stock has done exceptionally well, almost like a 10% jump into such a kind of a low beta name. So I think all of that indicates very well. We are now almost 200 or 250 points off from the lifetime high levels for the Bank Nifty, which I believe should be broken in the next couple of days.
Okay, next couple of days. To where? What's the upside looking like in the next couple of days, Kunal? That's really the golden question, because we've seen a good rally and ye dil mange more, right? So kitna more is really the question.
See, if you ask me from an optimistic point of view, I'll probably peg the targets at least 1,500 to 2,000 points higher for the Bank Nifty. So which means we should be looking at 59,000 to even 60,000. Sekada change bolte hai. So 59,000 to 60,000 is a change of digit. I think that is what I will be probably eyeing the Bank Nifty for.
Wow. Okay. And what does that do to the Nifty?
So for the Nifty, an addition of 2,500 points on the Bank Nifty looks at 500 to 600 points on the Nifty.
So new
with
all-time
a ratio of
high.
1:3. Yeah.
New all-time high on the Nifty.
Closer to that, I think we should be closer to that. See, the mood of the market is already indicative that it's not anywhere a market which is more concerned about all the issues which has been going on.
Correct.
This is a market which is raring to go.
Correct.
Now, if there is maybe some sort of a positive news flow or no negative news flow, like the Friday effects which you've been seeing, then I think we should be good for maybe an all-time high for the Nifty.
Well, viewers. All-time high in sight, at least for Kunal. And we'll wait and watch as to how that plays out. But for the moment, it's banks. Banks at the forefront of things. Before I take a view from Kunal on Kotak, let's listen in to what the management of Axis Bank had to say post the numbers. Now, mind you, the numbers, not exactly the best, but the reaction on the counter, well, we breached 1,200 plus in a jiffy at the start of trade. We've, of course, come off those highs, and we're sitting just below that 1,200 mark as we speak. 2.3% higher. Listening to what the management had to say with regard to those numbers.
At the recent GFF 2025, Axis Bank demonstrated its commitment to driving digital innovation by actively participating in nearly 15 major product launches. These include notable launches for UPI like UPI Reserve Pay, UPI Help, UPI for joint and business accounts, UPI Biometric Authorization Platform, and many others. Furthermore, we are proud to have been part of the pioneering launch of agentic AI payments using UPI, reflecting our focus on leveraging cutting-edge technology to shape the future of banking in India. With a resilient balance sheet, a sharp execution focus, and a clear strategic direction, we remain confident and optimistic about the opportunities that lie ahead. We'll continue to invest where necessary to remain differentiated and distinctive in our journey towards building an all-weather institution.
Okay, Kunal, let me stick with you. Kotak. Now, it's a very strong move from 1,900 to 2,200 in no time at all. If someone had missed the bus at 1,950, we've reached 2,200 in absolutely no time. What next, and what does this move signal in terms of Kotak Bank in particular? Do you expect a consolidation now for a while, or do you see some levels breached, which leaves room on the upside very, very quickly for Kotak?
So I think for those guys who look at it this way, that the stock has moved up 200 to 50 points and maybe the best of the rally is out, I don't see it that way. I see it, that if this is a breakout move for Kotak Bank, then how further can the stock move up higher? I strongly believe so that it's a strong move. It's a consensus cohesive move for many of the private sector banking names which have come along, something which we've been missing to see in the last 1.5 years. And now when you see maybe a couple of weeks of this kind of a pattern, you don't expect that this could be a pattern which could last for maybe another few odd days or maybe another couple of weeks. I strongly sense that this could be a multi-week, multi-month pattern for many of the private sector banking names. That's why I believe Kotak Bank, even at current levels of 2,200 thereabouts, I think should be on traders or investors' radar. I would actually look at if the bank Nifty is making new high, it would require many of these large cap private sector banking stocks to at least come back to their previous lifetime high levels or maybe go beyond that. So I think even if that happens, we could be looking at least another 8 to 10% jump on a stock like Kotak Bank. So bullish on the stock.
Okay, bullish on the stock and 8 to 10% more upside for Kotak Bank. But on that note, we'll slip into a very short break and keep the conversation going with our experts on the other side. Welcome back to Closing Trades. We were talking about earnings and particularly Nifty earnings before the break. And while we've spoken about Infosys, the outlook over there, and some other banking names as well, Axis Bank in particular, let's also throw the spotlight on the consumption space in terms of platform companies, and that's Zomato. Zomato's parent Eternal is all set to report its quarter two numbers. In fact, anytime now, we're expecting to see a strong set on a sequential basis. And let me take you through what the numbers could look like this time around. For Eternal, on a consolidated sequential basis, revenue is expected to come in at around 8,665 crores, which is a good uptick of 21% on a sequential basis. EBITDA is seen at 235 crores, which is quite strong because it's almost a 2x jump on a sequential basis. We're expecting to see net profit with a 4x jump at 108 crore rupees. So in fact, very healthy quarter is what we're expecting to see from Eternal. Margins also expected to see a sharp rise at 2.7% compared to 1.6% in the previous quarter. Quick commerce, Blinkit is expected to do very well. Food delivery revenues are expected to go up by about 5.5%. It's actually Hyperpure that could be under some pressure. A 10% cut in revenue is what we're expecting to see this time around. Going out business also looking strong. And key expectations are for the gross order value for Blinkit. It's expected to be around 25-26% sequentially. But the main metric to watch out for is going to be the EBITDA margin for the Blinkit business, because remember, it's still a loss-making business, and this time we're expecting that to narrow down to negative 0.6%. So anything around that is going to make the street happy, and of course anything lesser than that is going to make the street happier. So when the numbers do come out any minute now, it's going to be important to watch out for the GOV growth metrics and net dark store addition for Blinkit, the plan on that front, and a lot of other factors to watch out for. But Kunal, quick take on Zomato and the cut that we've seen on the stock in the last 30 minutes or so ahead of its earnings. The stock was doing well in the morning. We've seen a little bit of cut, and also a block deal is something we've seen.
See, I wouldn't read too much into the price cut today for the stock, because this could be one-off. Look at Zomato Eternal over the last 7-8 months. It's been doing exceptionally well from a point where the stock was, I think, at 240 or 200, 220 thereabouts, towards now 350 plus levels where the stock is cruising. I think you're bound to see some bit of a point where the stock comes into a zone of correction, consolidation, maybe some bit of churn which could be happening from this stock to the other sector as such. But largely, I think the view for Eternal remains to be bullish.
Okay, also joining us today on Fantastic Managers is Nitin Raheja, Executive Director, Head of Discretionary Equities at Julius Baer, India. Great having you, Nitin.
Thank you.
Wishing you and yours and the entire team at Julius Baer very, very happy Diwali.
Thank you. Very happy Diwali to all of you all and all the viewers.
Okay, wonderful. Nitin, what are you seeing in terms of GST 2.0? Where's the lowest hanging fruit? How best do you play it?
Well, I think you're clearly seeing revival of consumption, at least anecdotally when we look at the initial numbers. And in fact, one of the largest consumer sort of FMCG companies declared the numbers, just day before yesterday, and we were seeing the commentary. Commentary was very, very positive that was coming out from the company. And this is the company who sort of caters to everything from children's products to pet care and so on and so forth. So I think it's very heartening to see consumption sort of growing, because let's not forget that at 58% of GDP, domestic consumption is what moves the needle for India. And we had seen consumption do well, but that was, post-COVID, we had a K-shaped recovery. The upper K was doing well, the bottom K was struggling. And I think the government has put all its might behind, whether in terms of lowering interest rates, whether direct taxes, indirect taxes, towards sort of boosting this. And I think that is initially showing signs, and that is a very heartening scene.
Nitin, when you talk about consumption as a basket, we're seeing some recovery based on this company's numbers in the staple side, but too soon to still say because we have very limited numbers out yet. But what is your take on staples versus discretionary? Because GST is largely expected to impact discretionary more than staples, but it has been the staples pack that has been lagging behind. So what is your take between the two?
So I think, we are seeing a rural recovery, and staples, almost 50% of, staples is today rural. So if the rural recovers, staples is operating on a low base over the last few years. So I think you should see a sentimental improvement there. I think sentiment plays a very big role, in consumption and so on and so forth. So I think that, but you're right. I mean, we're not really expecting great things in staples, but just the commentary in terms of if there is an improvement should actually help a lot.
Okay. And how are you looking at valuations here? Because there's always that argument that if I'm looking at price to earnings or price to earnings growth, PEG as they call it, both of those within this space has looked expensive. Yeah. Even if I were to push the needle with regard to how one looks at growth, right? Say growth goes up, maybe becomes double digit, yet some of these names look expensive. How do you rationalize that? You can't always say that there's an infinite market that India is.
Yeah. So I don't think you can rationalize it from a valuation perspective. I think, staples was once upon a time, the way the valuations of staples was, it was a business which had strong cash flows. So it was sort of equivalent of, you're investing in a long-term bond with growth and so on and so forth. But now the market has broadened. There are so many different pockets of opportunities that are there. And staples is no longer even playing the role of the defensives that it was known for, because, and so when you look at it on a valuation basis, you are absolutely not on, except for select staples across the board. You really can't justify the valuations given the kind of growth that we have seen.
So how do you play it then?
So you play it through consumer discretionary the whole
Okay.
way. Yeah.
Okay.
You yet play it through premiumization of consumption.
Okay, so that's on the consumption front in terms of core FMCG, but keeping it with consumption, let's talk about autos. We've seen stellar recovery this year coming for autos. Of course, GST has helped. Commercial side has been helped. Rural has been helped because of monsoons. Your take on autos, two-wheelers versus four-wheelers, and where the next growth rally within autos could come from?
So I think when you look at autos also, the auto pack is the price cut is very welcome, because, when you see GST coming down from 28 to 18, and the kind of cuts that were made in pricing is very welcome to stimulate demand. But over a long period of time, so just stepping back, this should really help the bottom end of the autos. Okay. But from a longer term perspective, autos is all about models, the model refresh that happens. And that's where, if you look at the leaders today, who are the companies who have grabbed market share to become the largest, they are companies who have contemporary models who are actually doing well. And I think that's the big differentiator. And similarly, when you look at two-wheelers, right, there is a vast gap in the valuation within the two-wheeler space between people who are selling premium two-wheelers and people who are selling, the ones at the bottom. And that value, that tells you, because the first group has been able to virtually deliver sales growth through different cycles, and and hence are trading at those premium valuations. So I think the model refresh cycle is a very interesting thing to watch when you look at autos.
And within consumption, there are new pools of profit which are emerging. The old economy, if I can use the name of a company, the DMarts of the world, the profit pools are shifting, either more on the vendor side or more on disrupting the way in which the customer interface is happening. But the profit pool remains the same. And yet there are new companies emerging on the B2C side, directly to consumer, which are being valued differently on different models. Do you believe that's justifiable, and or does the pool of profit grow substantially because of these things, or is it just the valuations which have gone up industry-wide, and is that a pocket of concern?
So there are a number of questions that you've asked within this. Let me try to sort of start with the fact that there is this whole unorganized, organized segment, right, of the market. And we've seen a lot of movement post GST towards the organized segment of the market. So that's one. So the profit pool for the organized segment is growing. It's coming at the cost of somebody else,
Sure.
and so on and so forth. Then you have technology disruption that is coming in. You have AI, which is using information more efficiently. And all of these are causing inefficiencies in the system. So, for example, the middleman is getting squeezed more and more.
Right.
And so on and so forth. And there are companies who are participating.
That's right.
But from a percentage of the total pool, if you look at those numbers,
Sure.
they are yet tiny.
Yes.
So they yet have headroom for growth, and they have a business proposition which is delivering far more faster, more efficiently, and often at very competitive and better prices. So I think companies who are participating in using that are the ones who are going to keep on doing well. And I think the market, the way it prices it today, is these are markets which are today pricing years in advance very quickly.
Correct.
True.
And then what happens gradually is that 1 or 2 years down the road, you see it waits for a verification. There is another re-rating that happens. And then for the last part of the cycle, we really get no return in those stocks and so on. So these are super efficient markets that we work in. So I do believe that companies who are innovating using technology are going to continue to disrupt, and they're going to continue to grow their share of markets. I mean, I have relatives who have just over with us from Europe, and they are absolutely stupefied to see how fast commerce works out here.
Yes.
At any given point of time in the day, even at 12 a.m. midnight, they're there at your door delivering in 10 minutes. So I don't think we've seen this kind of things happening anywhere in the West. So I think it's the innovation that is driving this. And I think these companies will keep on growing their share.
So one follow-up. The trend is here to stay, right? That there's no doubt about. But are these companies necessarily interesting at interesting points of purchase at this point, you would reckon?
Right. So if you go by traditional valuation matrices, you'll find it very difficult to justify that, right?
Right.
So somewhere you have to believe in the business model and its ability to be able to, look at it 5 years from now in terms of what it will be.
Sure.
And, normally speaking in these models, it's winner takes all.
Yes.
Sort of thing. So then the profit pool also jumps.
Sure.
So I think that's where the market is. So I think currently you're paying a valuation for execution skills, not for current profitability.
Sure.
Okay. And you've spoken about AI. We've touched upon quick commerce. What next round of themes do you think could lead a fresh rally in the market going ahead? What could be the next big themes to watch out for the summer to come?
I think, if you talk about AI, we haven't seen anything in India.
Correct.
There's so much left.
Yeah, there is no AI play in India. So I won't be surprised if, and we normally, at times we are ahead of the curve, at times we are behind. In terms of AI, we are sort of lagging behind on the curve.
Correct.
So I think AI-led themes are, in fact, it's companies who never looked at it are being forced to look at it. Even technology services companies are being forced to look about and put investments to work because they were so used to working in a high ROC, low capex model, and now AI requires capex. I think that fundamental mindset. So you're seeing a lot of investments happen towards there. Whether it's data centers, I think you will see the first round of monetization come going ahead from areas like data centers. Assemblers in the semicon chain. I'm not talking of semicon yet because semicon, establishing a semicon, stabilizing it is a long duration process. So assemblers in the semicon process. So you will see a lot of those ideas. I do believe that consumption is yet going to be the big story and continue to drive for the next year and so on and so forth. I think to me, next year is also going to be a year of revival of earnings, hopefully. If you go by consensus numbers, most houses are talking of a 15-16% earnings growth. Now, why is that so? It's because if you look at one of the key elements of that is financials. Financials have, which account for 1/3 of the market, are coming off a low. where credit growth has fallen to 8-9%, margins are compressing. So if you see this coming back, and you know the RBI has also loosened strings, banks can now finance M&A. So they're opening up the liquidity, and so I think if you see credit growth going back to 12-13% and margin starting to come back, so you see 14-15% earnings growth happening from financials, and hence that number looks more likely than it was before. Then pharmaceuticals has had this long overhang, and now hopefully the fact that generics are being exempt should see pharmaceuticals starting to show signs of coming back. So I think there is a host of these buckets which will see that by the end of the year we should be done with the time consolidation that we are in.
End of this calendar year.
I think, yes, my own guess is you will probably start seeing it in the first quarter of the next calendar year.
Wonderful. What about IT?
Well,
I didn't hear you say anything on IT, so I put that question right off the bat.
So I think, look, as long as there is this melt-up that is happening in the West on AI, a lot of the money is going towards the hardware side of it today, whether it's towards GPUs, data centers, and so on and so forth. IT is going to see a comeback in some form when you have, when you anecdotally talk to a lot of companies, everybody talks about AI, but nobody has really found a great end use case of AI. I think that will be the next stage of evolution, and that's where the IT companies will come from an application perspective. Unfortunately, you could have a scenario where the productivity gains of AI, which IT companies are benefiting for, might have to be fully passed on to customers in the form of price cuts. So hence, IT could see growth, but it could be sort of, slower growth going ahead. And I think the valuations in IT are starting to reflect what used to be 27, 28 multiples are now down to 20 multiples. And I think the other element is, this is a great world for mid-cap IT because they don't carry the traditional bench strength, which today most large companies, IT companies are laying off. And they're much more nimble and so on and so forth. So I think all of that, I do believe that IT valuations have come off. There could be a short-term cyclical play at some stage. But I find it difficult to see the IT services companies being the kind of value creators. In fact, we just saw the results of IT companies and one of them announced data center play, which means they will have to start using their money for either acquisitions or CapEx.
And that near 50% ROC number will likely come off.
That has to come under pressure.
As a result of that.
Yeah.
Wonderful. Thank you, Nitin. Sorry.
But I just had one more question in terms of your earnings view. On one hand, we still have a lot of uncertainty in terms of some headwinds. We don't have a definitive trade deal with America yet. Geopolitical uncertainty continues. We're looking at a La Nina ahead. Given all of this, do you believe a substantial improvement in earnings on one side could offset any headwind that comes our way?
So I think if you really look at the GST announcement and in terms of the way it was preponed, was immediately after the H1B announcement came. And that was essentially reflecting the government's push behind it, right? And look, I have realized one thing in the last few years, wherever the government puts its might behind it, right? So whether you saw defense earlier, you saw infrastructure spending, they tend to be growth drivers for GDP as such. And this time around, it seems that the government has come and put all its might behind spurring consumption. So I would believe that should happen. And also, generally speaking, when you are in a year of elections, when you have the UP and the Bihar elections in all of 1 year, you will also see those handouts and doles, which again put money back in the hand of the consumer. So I think consumption is here to stay. I think we will have a deal sooner than later because I think there's a lot of reconciliatory tones that we are seeing. So I think if you put it all together, and also let's not forget this year's earnings growth is also hampered by low inflation. So we talk about real GDP, but nominal GDP is going to be barely around 9.5%, 10%. Next year, if the RBI expectations is that we'll get back to 4% or 4.5% of inflation, that means you're talking of 10.5%, 11% GDP. So it's not difficult to see why earnings growth should not happen.
Okay, this is a great conversation. I'm going to interrupt that. you know, the one big mover on the Nifty 50 index today, on the back especially of numbers, is a Nestle. Now, before I request Nehi to break down those numbers, let me check with Kunal with regard to charts. How is this one looking, Kunal? This 3% move just saw the stock zoom up on the back of numbers. Now it's 5% higher, in fact. What do you make of this move?
This is what you call classical breakouts for stock prices, and this is what, so an FMCG stock like Nestle in the last 2 days has run up, I think, 180 points. I think from 1100 to now 1280 thereabouts. So it's a fantastic move for the stock. And this tells you, we were making this point in the morning, that the markets are approaching results for individual large cap names with a risk appetite mode. They are not shying away from taking risks over here. I think that's the biggest hallmark of, and that's why I think the markets are rewarding all the ones who've been maybe taking a bet on Nestle. I think this is a classic breakout. This is here to stay.
Okay, and compared to what we were penciling in, Snehi, how does this? How do the numbers stack up?
Much better in terms of our estimates. So you have revenue and EBITDA that has beat estimates, PAT in line. Now that slight pressure on margin is there, but when you have such a strong top line growth coming in, EBITDA looking good, I think the street is not too worried about the kind of little bit of a margin compression that we've seen on Nestle this time around. And remember, this is also the first quarter under the new CMD, Mr. Manish Tiwari, and he has taken over the baton from Mr. Narayan in the previous quarter. So 1st August is when he overtook the company, and under him, it's the first quarter has been stellar. A double-digit growth everywhere in terms of value growth, except their milk segment. So be it confectionery, be it pet growth, be it their other segments. Nescafe has done well. Chocolates have been doing well. It's milk and milk products and nutrition that is slightly under pressure on the back of some monsoons. But we're going to be looking out for some more management commentary on that front. And also remember, Maggi, very stellar growth coming. Double-digit volume growth for Maggi is something that we had not even penciled in. So that is very strong, given the fact that we also have a lot of competition in this entire instant noodle segment. So looking very good on that front. And also capacity expansion for Maggi noodles has been announced in their Sanand facility in Gujarat. So all in all, looking like a wonderful set of numbers, highest ever quarterly earnings for Nestle in any quarter. In fact, Kunal, if I'm not wrong, last quarter, HUL was up 4% after its earnings. And I don't think we have seen this kind of intraday move for any FMCG counter in a very long time.
And to put together for these stocks to perform on such a kind of a day tells you that the markets are going into a very enthusiastic move for the FMCG names.
Okay, so that's with regard to FMCG. Nitin, let me come to you on banks. You touched upon how lenders could lead the earnings re-rating cycle going forward. Now, various ways to play this, right? One way is you play the NBFC pocket, which is benefiting from the repo rate cuts coming through. You played through banks, the larger ones, where growth has come back very, very well in Q2, as some of the numbers seem to suggest. Or you played through the PSU banks and the mid and the small banks. So just so many ways to play it. PSU banks, sustainability of profit, etc., etc. Just some of the pockets or some of the matrices that you would want to look for if you play them. Where is the best value trade at this point?
Well, if you really look at compounders, it's the private banks.
Sure.
And even within the private banks, I would stick to the top tier banks. Purely because when we look at banking, right, we look at underwriting culture. And that is a very big thing, right? In markets such as this, where liquidity is opened up, you do see the second tier banks also participate and do well, and so on and so forth. So we would have the private banks as the largest chunk. We are looking at, and we have got some PSU banks also, primarily for a fact that for the first time, I think, look, you are at a scenario where we've had GST cuts, we had direct tax cuts by the government. Now, at the same time, the government is committed to meet its fiscal deficit target. So I do believe that whenever you have a scenario and the government then falls back on PSUs, right? And you had that manthan of the PSU bank some time ago. Then you had the OMC manthan and so on and so forth. So I do think that the PSU banks are being asked to up their game because there is going to be some amount of value unlocking that the government would expect from its PSU pack going ahead. So I think it's a good time to even look at PSUs, and the valuations are very, very attractive.
Okay, viewers, what we're going to do is we're going to slip into a very short break, but I'm very, very curious to know what this manthan of OMCs, which Nitin is speaking about, what that means, especially given the fact that there was a comparison made in that Manthan with some of the other stocks which are online platform companies, and a comparison was made in terms of market cap. We'll talk about that and much more. Stay with us here.
Back with closing trades. Thanks so much for staying tuned to ET Now. And Nifty Bank is the index to talk about at this hour right now. 57,500, a 700-point uptick coming in just today on an intraday basis. And the strength that we're seeing on Nifty Bank continues to trade at the day's high and roughly 110 to 120 points away from a fresh record high on Nifty Bank. So seems like this entire Diwali spirit is coming a few days early for the market and looking good across the board. And let's keep the conversation going. And we have Nitin in the studio. Nitin, you were talking about how the market is usually very good at penciling in the future a little bit early. On the earnings front, do you believe we penciled in too much caution too early and now we're being surprised?
So yeah, it's pretty interesting. We went into this earnings season with most expectations and consensus being expecting a very poor Q2. But the markets were saying a different thing because the markets were trading at the upper end of the range that they've been trading at. So, and I was just remarking this same thing to a colleague in office yesterday, that it's pretty interesting when I see the market behavior. At least the initial group of results that have come have seemed to be better than expectation. Which, by the way, is also the case always. The good results come initially and the bad ones come towards the last 10 days of a week and so on and so forth. But so far, I think also the commentary is more positive than most people thought.
Nitin, any interesting pockets of opportunity that are available right now that you're seeing? You chat with plenty of companies. We were speaking about that. Some of them in the mid-small cap segment. Is there a specific pocket which you're liking, or is it just bottom-up stories?
So I think it is, when you look at that pack, it's such a diversified pack.
Sure.
So I think it's all stock-specific, bottom-up ideas. By its nature, our portfolios are largely constructed around the large and the higher, larger mid caps and so on and so forth. But as I was just remarking, that I have been seeing so many of these small cap companies, all of whom are talking of very aggressive growth.
Sure.
But I must put a word of caution that the valuations do not discount the risk of execution that often comes with the small cap. But more from an economic perspective, I think the mood is far more upbeat. As when you talk to these entrepreneurs in terms of their business prospects. And a lot of them are essentially feeders to larger industries, which means going ahead, some of these larger industries should also start doing well.
Sure. Hold that thought. Kunal, is there a view you have on a KEI Industries? That one is languishing 6.5% lower. I'll go across to Snehi, of course, after you, to get a sense of, she spoke with management and we'll hear the management as well. But first, the technical take.
So again, I think it's more of an aberration, one-off move, the stock reacting on the results. But I strongly believe that I think at 4,100 level, it's a stock which has gone through a major mean reversion, has come back towards a 50-day moving average on the daily charts. We've seen this tendency for KEI in this 1,000+ point recovery, that the stock has this tendency of retracing, coming back towards its 50-day moving average and then and resuming the uptrend. Maybe this time the reaction could be a little bit delayed because of the impact the stock has seen on the results, but I believe that maybe on dips it should be a good buying opportunity.
Okay, so buy on dips is the case for KEI. Kunal, the dip that we're seeing today, in fact, let's just fire the intraday chart for KEI and understand what the cut has been. A 6.5% cut is what we're seeing now. One must wonder that on the back of an inline set of Q2 numbers, why is the stock still down? And actually the answer lies not in its Q2 numbers, but in its first half numbers. If you take a look at what the consensus estimate is for the 4 quarters put together, where the company should have been at the halfway mark, it's much below that right now, and maybe that is something the street is not liking. Another factor why the stock could be languishing today is if you internally calculate EBITDA margin and take the EBITDA figure the way it is supposed to be calculated, that number comes around 9.9%, slightly lower than what the management had guided for, between 10.5% and 11%. Of course, they're factoring in the commodity commodity fluctuation that we've seen, and that has been the case with copper prices of late, which is the main raw material for someone like a KEI and the wires and cable segment. But if you don't account for all of that, and if you simply just work on operational metrics, you have a slight miss that's also coming in on the margins. Two reasons why the stock is languishing, and the third, their EPC business also has seen a massive cut in the first half this year compared to the first half last year, albeit it makes up a very small percentage of their revenue mix, and they're consciously trying to cut down the contribution from the EPC business. That's reason number 3. Reason number 4, there has been a delay in terms of their capex execution at their Gujarat plant, and that has been delayed by 3 months. So, lots of factors that are at play here. So, Harsh, while the Q2 numbers prima facie may look good, if you dig in a little deeper, you'll understand why the stock is falling. And we also caught up with Mr. Anil Gupta, the CMD at KEI Industries, to understand their capex plans for their Sanand plant and how much is spent, how much is remaining, and what is the deployment timeline for the same. Let's go across and listen in.
We have already spent more than 1,000 crore on our Sanand plant so far as a capex, and another 400 crore are expected to be spent in this financial year. Total expense of capex on Sanand will be around 1,950 crore rupees, which the balance will be spent in the next financial year. And so far as other capex are concerned, it is under consideration, and we will be able to announce something for further capex in next 3 months.
Okay. Nitin, so of course there's one play is cables and wires in particular, but let's talk about real estate and ancillaries. That's a space we haven't touched upon, and there's a whole value chain there as well. By the way, Eternal's numbers on your screen. You want to quickly look at those for viewers. We'll dissect them in just a minute while Snehi looks at them. But give us the take with regard to realty. How do you play it? We had Mr. Irfan Razak speak with us just a couple of days back. He said Mumbai in terms of pricing, he's being cautious. NCR in terms of pricing, again, he's been cautious. So there are these pockets where pricing is one has to be a bit cautious about. How should you play it?
I think you've seen a great real estate cycle. I think there is a stage of consolidation that we should see now, because the kind of price increase that we've seen in the last few years is surely not sustainable. So I think but the important thing is that to see how pre-sales are and how demand is from that perspective. Also, I think the more interesting space is going to be the real estate ancillaries, because a lot of the bookings that took place over the last 3-4 years are finally going to start seeing, and that's where you should see building materials starting to do well. A lot, some of the building materials have also benefited from the GST cut, where the unorganized players were actually starting to, get and pinch them. So, like say for ceramics, so you should start seeing that happen. So I think the whole real estate, building materials, cement, all of those should start doing well.
Okay, so positive with regard to all of those, and let's in fact go across. We have Irfan Razak's small chunk of that conversation lined up for you, where he mentions a slew of launches that will happen over the next quarter or by H2. Listen in to a slice of that.
In fact, our next launch is in Mumbai, which is the Garden Trails in Dahisar, Mira Road, which is, I think we should get ready for that. Bangalore also, we have got a big launch called the Evergreen Prestige Raintree Park, followed by many others. So, and of course, Hyderabad, by the end of the quarter, we'll have the Golden Grove. Again, that's a pretty large and big development. Plotting development, whatever we are doing, it's basically happening in Bangalore at the moment. We are looking at something in Hyderabad and subsequently in Chennai. But Bangalore, I believe that these 3 projects that which we launched in the last quarter, which is the Prestige Autumn Leaves and then the Prestige Greenbrook and of course the Crystal Lawns. All these 3 met with a very good response. People are very keen to buy plots and then build independent homes. And that's a new trend that has been there for the last couple of years or maybe 3-4 years.
Okay, that gives some sense on realty, and we'll go across to Kunal with regard to that one. But Eternal's numbers, let's try and get it right and get a good perspective on what the numbers suggest. Pull up the stock price and you can see a bit of a spike on it on the back of the numbers that have come out. Snehi, what are you reading in the fine print? What's standing out? Is it a good set? Is it a weak set? Right off the bat, of course, but give us a sense.
Right off the bat, first take coming in, it's a big beat coming in the revenue front. The revenue figure has come in at 13,590. We were expecting 8,665, so that revenue looks good. It's a big beat over there. EBITDA exactly in line with our estimates. 239 crores is the figure. 235 is where we were penciling in the EBITDA. What looks really, really concerning this time around is the net profit figure. It's a big miss versus our estimates on the net profit figure, because take a look at the number. It's coming at 65 crores and our estimate was 108 crores for the net profit. So we'll just dig a little bit deeper and wait for that letter to the shareholders to come, their form of the press release, and try and understand what has weighed on the pad this time. Of course, they have shifted to the inventory ownership model this time around, due to which the purchases of the stock in trade part of their P&L has seen a 4x jump, almost a 4x jump on a year-on-year basis, and that is something that could have weighed on the overall profitability, but we'll wait for a little bit longer and try and understand what has happened on that front. We have the EBITDA margin number 2 at 1.8% versus 1.6% on a year-on-year basis. We were expecting this number to come at 2.7%, so miss on the margin front as well. But of course, we are waiting to see what the GOV, NOV figures are, what the take rates are for the food delivery, the quick commerce business, Blinkit store edition. All of that commentary is going to be important to watch out for, but it seems like the street has already factored in something positive on that front because of the strong beat coming in on revenue. The stock as of now is up 2.5%. Quite the surge coming in. So we'll just take some time and decode what the numbers look like, Harsh.
It's actually quick commerce, Snehi. Let me be very, very categoric here. 9,900 crore on the top line for quick commerce. That's what's driving the kind of numbers that we are seeing on an eternal. You compare that with same time last year and last quarter, it's materially higher. Believe it was around 3,000 odd crore, 3,500 odd crore in terms of the same time last quarter. So you're seeing a very sharp jump up with regard to quick commerce. That's really where the move has come from. And that, viewers, is key, because when you're looking at some of these companies, they're pivoting as much away, or rather I can't say they're pivoting away from food delivery, but they're pivoting towards quick commerce as being the mainstay. Any market share improvement in quick commerce is viewed positively. My sense is that's what's making the stock react. 2.25% higher as we speak on on Eternal, but we'll continue to analyze the numbers and we'll give you
If I could just interrupt you for 1 second over here. What I'm noticing on quick commerce is a very interesting trend, because the number last time was 1,100 crores. We were still being very optimistic and penciling in around 3,000 crores or more than that. And this number that we're seeing over here, 9,891 crores, is much beyond anybody's expectation. So it's actually that Blinkit arm that has done very well. Now what's left to see is what the adjusted EBITDA for Blinkit comes through, if it's a profit this time around. So we're going to very keenly be watching for all of that as well. We do have the segment results over here. Yes, it does seem like you have quick commerce. It's showing a PAT of about 5 crores. We'll see what happens on that front.
And would I be worried if there's a margin decline? Think about it this way. Would I be worried if there's a margin decline if quick commerce is doing very, very well and I've gained market share in quick commerce? Would I be worried if there's a temporary margin decline? Not really,
I don't
right?
think so. And that was the case with Nestle. We were talking about, since the top line was so strong, by the time you reach the margins, you already have that kind of optimism that you've built in around the stock. And seems like that is the same story playing out for Eternal.
That seems like it. That seems like it. But of course, we'll wait and watch. Also, analyst views coming in. Nitin, you have a view here. Would you like to weigh in?
I think broadly, I think quick commerce is today in a place where the winner takes all is what's happening. And once you get to a size, can you imagine if there is a slight increase? For example, today if you look, there is a 5 rupee delivery charge which is added. You don't even notice it, but on those volumes it can be immense.
Absolutely. Rahul Jain joining us at this hour as well. He is Director, Dalal Capital, if I recall right. Yes. Rahul, hi, great having you. Let me first start off by asking you, how's the fine print looking? Because the stock is absolutely zooming. It's 4% up in trade now.
Yes. So one exciting thing that you could see right now is that the QC business from a segmental point of view is showing profit. So this is something which is exciting. Of course, once the letter comes in, more information would come in form of what are the breakup differentiation, because kindly note, in this specific quarter, one big change was to happen, which is like they were about to move into inventory model, and how that model shift has led to growth in revenue and profitability, something which is the point of contention here.
Okay.
Okay, Rahul, that's your first sense coming in on Eternal. The letters to the shareholders is out as well. We have the GOV, NOV numbers too. The quick commerce NOV looking good. We were expecting 26, it's come at 27, looking healthy. Rahul, what I want to get your view on is the quick commerce EBITDA margin that we were trying to highlight earlier. It's coming at negative 1.3% of NOV. When do you think we're going to edge towards profitability on this front over here? Any break-even timeline that you have?
Yeah, so it's closer to that, and I think, as I said, there was one more positive shift that was happening, is that once they move to the inventory model, which has happened in this quarter, some of the requirement on the working capital side will go up by roughly 3,000 crore, but that would mean higher commission on the take rate basis, which is driving the profitability improvement in this quarter. And if now they are near to that point, then probably the outlook of getting break even is not a very far away goal in my view.
Okay. Quick take, Rahul, with regard to Hyperpure. That's one of the more profitable businesses that Eternal runs. Those numbers not looking impressive. Is that at all a concern?
No, I think looking at the TAM and total potential of in long run, I think the highest priority business is QC and followed by food delivery, and Hyperpure is not something which can meaningfully add to the number. So that way I would not give too much attention to that part of the business.
Before we let you go, in comparison of what could be the next lever of growth for Eternal, of course, quick commerce is their big pillar that they're betting on, but where are you seeing food delivery headed vis-a-vis the entire quick commerce segment?
I think food business, as we are seeing from their commentary, is looking like a more mature business with a higher side growth potential in the 15 to 20% zone. And more innovation in that space is happening with Swiggy. So I think if we compare within that space, people are more confident on Swiggy in driving the next leg of growth in the food side of it. And QC side, Eternal continues to dominate.
Thank you so much for coming in and speaking with us and giving us that perspective. First tick with regard to Eternal stock, really volatile. We're down 0.7% now on an Eternal. So the stock has gone up and has come straight back down, it seems, 0.5% lower on an Eternal as we speak. While we do a chart check, let me thank Nitin, who's overshot his stay. Thank you so much for being very, very gracious with your time, Nitin.
Thank you.
Giving us some great insights, nuggets and perspectives.
Thank you. And a very happy Diwali and a new year to you.
Wishing you the same.
Thank you
Thanks,
so much.
Nitin. Kunal, what are you seeing on charts? Eternal, what's happening?
Yeah, of course, volatility because of the results. But, I look at it this way, that you look at the stock over the last 5 months, 6 months, 1 year, 2 years kind of a time frame. I think it's done exceptionally well, ticked all the right boxes. You're bound to see some bit of volatility if, the results on the results day or maybe the day post the results also, that volatility could probably carry on for the stock price. But net, I believe that, the trend for the stock is still on the bullish side.
Okay, Kunal, just want to get your view for the last 2 minutes that we've seen on Eternal, the kind of fall that we saw after the spike that came in. Of course, now we have more numbers coming in, more new metrics that Eternal has released this time around. Kunal, do you believe that excitement around Eternal in the market is too high, that initially when you see the top line number, you get excited and the spike comes and then...
No, but that's natural, right, Sneh? Because, a stock which has done, I think, almost 8x or 9x, in the last 2 years, you're bound to see that kind of an excitement building into the stock price. And you want that such kind of companies will keep on delivering results on the positive side or as per or above expected lines. So I don't see that as an unnatural reaction for the stock price. What you need to see is that post the results, is there a major negative downtick into the stock price on a net basis, whether it's broken those major crucial support parameters, for itself, that calls in for maybe a mood check from the short to medium term traders. But as of now, when you look at it this way, down 1.5%, it's fallen from the intraday highs. But then just prior to the start of the show, also we were discussing that the stock was already down a couple of percentage points. So moving up higher, reversing the course, coming back to flattish territory, I'll call this as at par reaction.
Okay, at par reaction, but there's also more news trickling through with regard to an Eternal. You have the letter to shareholders which has been released, and we'll quickly dissect that in a few minutes. But that reaction likely a result of that letter. 2% lower now on an Eternal. That stock has reversed really quickly. All of that enthusiasm has now evaporated completely. But we'll just shift focus for a bit before we come back and dissect what Eternal had to say to shareholders. It's almost Diwali, the festival that celebrates light and Lakshmi. So let's revisit the billionaires that added more weight to their wealth and the ones that fell off the table. India's billionaire list sees industrial and telecom tycoons soar, while tech and pharma magnates lose ground. Mukesh Ambani retains the top spot with an 8% wealth rise as Gautam Adani stages a strong comeback. Kanishka joins us with that list.
That's right. As we close out summer 2081, let's take a look at who got richer and who lost billions in 2025. That's among India's top 10 wealthiest people in 2025. First up, let's start with gainers. Now, the biggest jump came for Gautam Adani, of course, whose wealth surged by $12.4 billion in just 2025. That is year to date, taking his net worth to over $91 billion. That's a strong comeback, after last year's volatility that we saw. Next up, Lakshmi Mittal saw his fortune rise about $8.3 billion thanks to a global metals rally. That's a whopping 42% jump. Mukesh Ambani, on the other hand, India's richest man, he has added $7.2 billion with his wealth now nearing $98 billion, driven by strong telecom and retail performance that we saw for the company this year. Other than that, Sunil Mittal, he has also had a stellar year, up $4.8 billion, supported by Bharti Airtel's expanding digital play. Kumar Mangalam Birla, he also has gained $3.2 billion, while Savitri Jindal has added over $1 billion to her fortune. Now, on to the losers in 2025, and some of them saw big declines. Shiv Nadal's wealth dropped the most, down $7.6 billion as IT stocks came under pressure. Shapur Mistry and Dilip Sangvi, they've each lost about $4 to $4.5 billion, while Azim Premji's net worth, that fell by about $4.3 billion. That's also reflecting the IT slowdown that we have been seeing across the world. So the story of 2025, metals, telecom, infrastructure, and those are the billionaires that gained, whereas tech tycoons took a hit. Now the wealth leaderboard may be steady at the top, but fortunes have clearly shifted this somewhat. Well, as we head into summer 2082, let's see where the rally really happens and who are the billionaires that we will be tracking next somewhat.
Okay, thank you for that, Kanishka. And with that, we'll slip in a very short break. On the other side, we'll continue to talk stocks. Stay with us here on ET Now. Staying with us here on ET Now, you're watching Closing Trades, and Z Entertainment's numbers also trickling through. Numbers not exactly looking as good. The profit has fallen when you're looking at it YOY. I'm curious to know what the QOQ number is, because plenty at play here where Z is concerned. And give me a second and I'll pull that out for you. QOQ as well. Profits have fallen. 144 crore was the profit after tax number in Q1 FY26. Currently sitting at 77 crore, down nearly 50%. So likely some bit of disappointment. Media stocks, Kunal, and this is also a bucket which has been very, very volatile, if I can call it that. Big movers, but also come with it big opportunity. Are you liking any of them?
I think they've been consistent underperformers, even though they've been volatile. But I think likes of Sun TV, Z Entertainment, and such other names, I think these stocks have perennially been, at least over the last 12, 13 months, have been going through a major downtrend. And the concern is that these stocks, there's no major buying pattern or any kind of an oversold nature on indicators on the monthly charts for these stocks, which calls in for any kind of a revival. Even if there is a revival, it's more of a time-wise consolidation which happens. There was a rally, for example, for Z Entertainment, I think somewhere mid-part of this calendar year, or it is the first half of this calendar year, where the stock had moved towards 135 to 140 range. But then the way the stock has fizzled out post that rally, indicates that the larger trend for the stock is still on the bearish side.
Okay, and some of the large caps doing very well today. Kunal, and HDFC Bank, the heavyweight, Reliance Industries has made a smart move as well. Any of these looking interesting? You did mention you like HDFC Bank. I recall you saying it in your opening comments today, if I'm not wrong. More upside from here this week. Can we pencil that in?
Yeah, we should be, because I think now the tilt is favoring back again to the traditional large cap private sector banking names. So HDFC Bank was one of my picks yesterday. ICICI Bank was one of the picks today, and I think both of these stocks, they look quite set for a breakout, or at least a reversal of the mood check with these stocks have been going through over the last many months of underperformance. So I think that's the bigger trigger which I'll be watching out for many of the private sector banking names, and especially for the likes of HDFC Bank and ICICI Bank.
Okay. And some of the consumer names as well, Kunal. Sorry, before I come to consumer, let's look at Reliance. That's the other heavyweight which is done decently well. Smart move, as I did mention. How does this one look on charts? Because we'll have earnings come Friday. So trying to get a sense before earnings whether we should play the trade and then see how Monday plays out.
See, as of now, there is no major positioning which has happened on Reliance Industries pre the results, and this could be a surprise, positioning from the market participants pre the results for Reliance Industries, because generally we've seen that the stock goes into a trending manner, whether it's an uptrend or a downtrend, depends on the expectations. But this time it's been absolutely flat for Reliance Industries, where the stock has just gyrated around this 1380, 1400 mark. A 20 point, 50 point pivot range for Reliance Industries is a very, very tight band for a stock like Reliance Industries. So I would expect that, let the stock come out with the results and then show the kind of moves which one is expecting, whether it's on the breakout or on the breakdown side, and then take a trade.
Okay, wait and watch on a Reliance Industries is the call. Of course, we'll start to give you a visibility on what the numbers might look like, or what analysts are penciling in with regard to Reliance's numbers. But we've got a slew of numbers expected later today evening. And let's start off with Infosys. Q2 earnings, steady quarter is what is in store. At least that's what's likely. BFSI revenue, where does that stand? Mansi joins us with the take on what to look out for with regard to Infosys.
IT major Infosys is slated to post its quarterly earnings, and we'll start with the revenue drivers. We expect an uptick of around 6% in terms of revenue. The growth will be basically supported by the BFSI vertical. If we talk about the margins are expected to remain stable at 21% is what our expectations say. In particular, talking about the headwinds, the concerns in the overall setup, the higher S&M investment, legal professional costs are some of the concerns which will trigger the results for that matter. Talking about the tailwinds, the positives, rupee depreciation and operational efficiencies which we have seen in the company and the development of the company and in the operations of the company will act as the tailwinds in particular. Guidance, we are expecting the revenue growth to be in the range of 1 to 3% on a year-on-year basis, and also if we talk about the margins, 20 to 22% is what is expected. Note the guidance excludes the Versant Group acquisition impact, so that is an important note. In the guidance which we are talking about, it excludes the Versant Group acquisition impact. Lastly, talking about the key monitorables which one needs to watch out for, the discretionary spending outlook, H1B visa impact, Gen AI deal win and revenue productivity impact. All the IT companies are now talking about artificial intelligence and developing their workforce in the AI category. The vertical performance, deal TCVs and pipeline and pricing trends. These are all the key monitorables which we need to watch out for when the Infosys numbers will come in. All in all, we expect stable margins, revenue to drive growth, and at the same time, the profit will also see an uptick of around 4%.
The take on Infosys. But Mansi, what about Wipro, the other IT company expected to come out with its earnings? Also take us through what you and the street overall are penciling in when it comes to Wipro's Q2.
IT major Wipro is slated to post its quarterly numbers, and if we talk about the parameters which we are considering, we expect flattish constant currency revenue on a quarter-on-quarter basis within guidance range of 1% at least. The BFSI vertical will drive growth we do see that in all the IT segment company results, is the BFSI vertical which is performing really better, and the same will be the case in case of Wipro as well. Weakness will be seen in manufacturing, retail, CPG and logistics segments. Margins are likely to stay in a tight range due to upfront requirements in large deal ramp-ups and the few concerns which we did see. Margins in a way will see a softening, a slight softening, or see a bit of an uptick. We are expecting it to be in the range of 16 to 17% due to muted top line and large deal ramp-up cost as we speak. The second half is expected to outperform the first half, supported by strong deal closures in the first quarter. So that's something we need to watch out for. Key watch points which we are considering, the monitorables are the quarter 3 guidance tone and large deal execution, what the management is talking about, the forward-looking approaches, execution on ramp-up, H1B visa fee impact, consulting demand outlook, deal to revenue conversion visibility, margin and vertical commentary. A very important and critical observation is that all of the IT companies are now talking about artificial intelligence, and clients prioritize AI data and modernization programs, seeing a clear trend of many AI projects moving to scale and production. So clearly some announcement is expected here as well in terms of AI and going ahead in the artificial intelligence and that space in particular. So all in all, we expect the revenue to see an uptick. The EBIT will also see an upsurge. Margins will stay intact in 16 to 17% levels. However, we might see a downtrend in the profit front.
Okay, thank you for that, Mansi. Mixed bag here in terms of at least the stock price performance today, Kunal. Anything within IT interesting you?
Well, I think only the mid-cap IT names, Persistent, for example, that's done reasonably well post-results. So that's an attractive name, and it indicates that the markets are going very specific towards few of these IT names. Maybe a trade on HCL Tech around this 1600 mark, 1590 thereabouts, because I think it was one of the better performers from the large cap IT stocks going into the results, and of course post results also. We'd seen a decent kind of a price action. So that could be another.
Sorry, buy now to 1600. Is that what you're saying? Okay. Fair. And stop loss for HCL Tech?
So that should be around 1480.
1480. Okay. So one within the large and mid cap IT, I'm not surprised because you've been persistent with persistence since yesterday. So we'll stick with that. LTIMindtree is the other one, and likely to post around a 4% QOQ revenue growth in the second quarter. Growth largely led by retail, travel, manufacturing. Street eyes Mr. Lambu's strategic roadmap, deal ramp-ups, margin sustainability. Mansi still standing by to tell us what to watch out for.
The quarterly earnings of LTIMindtree, our expectation is to see a constant currency revenue growth of around 2.1% on a quarter-on-quarter basis, driven by a ramp-up of large deals. We also expect retail, travel, manufacturing and healthcare verticals to be the growth leaders, the growth drivers. Margin expansion is expected on operational efficiency, growth leverage and rupee tailwind. So these are a few positives which one needs to consider, which will help the margin. However, our expectation are for the margins to be in the range of 14 to 15%. So that's what we expect. Talking about the constant currency growth, it will be aided by ramp up of agri deal, top account pass-through behind and cross-currency gains. And a few watch points which we need to consider are the progress on CEO Venu Lambu's strategic initiative. Last year, the management took Venu Lambu as the CEO of the company, and now what are the forward-looking strategies he has for the company is what we need to watch out for. H1B visa fee impact, demand outlook in BFSI segment, particularly manufacturing and high-tech segment, the deal ramp-up visibility, and margin sustainability ahead. So these are the key watch points, monitorables which we will consider. However, talking about the numbers, we expect good set in terms of revenue, EBIT, margin as well as profit figures.
All right. So that's with regard to LTIMindtree. Thank you so much, Mansi, for rounding all of those up, and you have a busy evening, of course, in front of you. Axis Bank closing in around 2.5% higher. Hindalco doing well as well, 2% plus higher. So the top losers, Eternal, 3.25% down, and HDFC Life. You're largely seeing, I beg your pardon, earnings play out on the moves that we're making on the index. 1% higher on the Nifty 50. We breached 25,600 briefly. We've come back off those highs of the day. So currently sitting 25,573. The indicative close is around 25,590, a shade below 25,600 is what we're seeing. Numbers continue to dominate, and let's pull up a couple of stocks where numbers have come out, and IOB is one where numbers have come out, and let's pull out Indian Overseas Bank, see what that one is doing in trade. Well, there you go, 1.25% lower. In fact, let's pull out all of the PSU banks very, very quickly. A Bank of Maharashtra was a big mover yesterday in trade. I'd be curious to know what's happening with a Bank of Maharashtra today. Well, down 2.8 odd percent. So you're seeing a bit of a cool off after that spike that we saw early in the morning. PSU banks, you're really bullish with regard to PSU banks. Good day to buy when you're seeing this sort of tepid move on a day when otherwise the index is doing so well. Is this an opportunity where you can pull a trade for tomorrow?
Yeah, I think it's a good day to add on to the stocks from many of the PSU banking names. You can start off with the larger cap names. I think SBI is one of the better bets at current levels, and then move on to the other stocks where I think the likes of Canara Bank, PNB, Bank of Baroda to a larger extent. I think all of these stocks which have done reasonably well, they should be on traders' radar. Bank of Maharashtra, especially after the up move yesterday and then the follow through up move, at least at the start today where the stock was up to 60, 61 plus kind of a mark. Today's reversal I think should be taken as a good buying opportunity. So bullish on PSU banking names and expecting that this stock or many of these stocks from the PSU banking category could be a good candidate for buy on dips.
Okay, also let's pull up an Indian bank. So buy on dips surely. But Bank of Maharashtra is one. Any others for buy on dips today, Kunal, within the PSU banking pack? You spoke about Bank of Maharashtra. I missed any others that you named.
So Bank of Baroda could be the other name, and Canara Bank.
Okay, great. So you've got three names to play with between today and tomorrow with regard to PSU banks. That's of course on charts. The Nifty Auto is the other one, doing very, very well for itself. Kunal, M&M?
Not M&M, but I'll be bullish more on Maruti. I think Bajaj Auto is looking quite strong, ripe for a breakout. We've seen Hero MotoCorp doing exceptionally well. Maruti, of course, is one of the leaders in that pack, so I'll probably be bullish on Maruti even from current levels. You might probably expect that few of the other stocks from the auto pack, the likes of Ashok, Leyland, etc., which have been doing reasonably well in phases, and these stocks could also start to pick up good momentum. And I think I also sense that from the auto pack, you're seeing the auto anchor names. They are the ones which are also starting to look very attractive. Samvardhan Motherson Sumi, that's something which is popped up in terms of the breakout mode. Sona Comstar and many of the other names which are looking very attractive.
Okay, so that's the take coming in on some auto anch stocks. But with that, Kunal, thank you so much for joining us today and sharing your perspective on the technicals with our viewers. A minute and a half left. Let's start winding down for the day and let's see where the Nifty is right now. Solid surge. We had seen a 1.1% uptick coming in slightly off the day's high, but not much to complain about for the Nifty, a 250-point uptick coming in over there. For Sensex, it's up almost a 1% uptick coming in, 83,406. Nifty Bank, 1% uptick coming in close to that fresh record high, 57,400 on the Nifty Bank. The advance decline ratio slightly skewed towards the advances, and all in all, a good day of trade coming in even from the broader end of the market. Although they underperformed the benchmarks, you did have a good move coming in on the mid-cap and the small cap space as well. The small cap up 0.2%. Nifty mid cap also did pretty well for itself, up 0.4%. Top Nifty gainers today, Nestle on the back of strong Q2 earnings, about a 5% uptick. Tata Consumer, Titan, Kotak Mahindra Bank, Axis Bank, good show coming over there in terms of the stock move. Adani Ports, M&M, some of your top Nifty gainers. On the flip side, massive pressure on Eternal after that initial spike on its stock post its earnings, almost a 4% cut over there, followed by HDFC Life, Shriram Finance, IndusInd Bank. These are some of your top losers. In terms of sectoral gainers and losers today, you still have PSU Bank that has once again made its way to the red, so that's your only and top sectoral loser. On the flip side, FMCG pushed through by Nestle, that's the top sectoral gainer, followed by Realty, Auto, Bank, Metal, Energy, IT. Pharma and Media continue to be on the flat line. So that is the way we're wrapping up for the day of trade today. It's a good day of trade coming in, almost a 1% uptick coming in. We'll give that Nifty rate some time to settle, but it looks like we've closed above the 25,550 mark as well. But with that, we'll wind down on this edition of Closing Trade.